Good morning, everybody. Going to be a fun one. May 3rd. Now, we are going to go live today at 2 o'clock. It's going to be a lot of fun. I'll post the link later. Make sure you subscribe to the channel, click all notifications. I'll actually even going to mail out the link today so that people have it. Now, a couple things to go over. Okay. In the video, I'm going to just start here. I think this is the most glaring, the most obvious. We got to the top of this level and we rejected. Now, I have a long position and I started a swing trade long position. There we go. And I just want to talk about this so that we're all on the same page. You tried to get up over, you were unable to get up over. There, I say it. And I see the trying to get up to there, the rejection, the trying to get back over that level, and then the rejection, right? We can all see this, okay? And then you just trade it down all day ahead of AMD. What's important is what's happening now. We're going to talk about some key levels here, and we're going to have to watch some key levels. If we look at this 7 o'clock time period right here, the open, you're up over $1.50. You're up over $2 since the open at 7 o'clock when retail can buy. So that means that we're watching retail buy. Now, the level that we really have to watch today is right here. Okay. You see that level? See how we've already rejected that level? Now, it is possible that we roll again. That is possible. You're going to have light volume today. Okay. I have a swing trade on this. And the reason I'm pointing this out is so that you can understand that it doesn't matter what your bias is in your book, right? Whether or not you're long or short, it's completely irrelevant to what is going on with the stock. So you have to detach and not hope, not dream. You have to look at what's actually going on, right? I got to this level. Support becomes what? Resistance, and we reject it. It's not 280, it's 280.86, and that's where we got to. If we can flip this level, this is something we want to watch. If we can't flip this level, we might want to go short. Okay, that is something that you're going to have to think about. Now, that's up to everybody and how everybody else wants to trade. It's not up to me, right? Everyone has to figure out how they're going to trade and what works for them. And I think that that's very poignant. I'm suggesting that you look at that level, and then once you look at that level, you make a decision on what you're going to do with it. For me, that's a level where I have to consider, one, my long might be wrong, and two, I might want to short it. Now, long term, I don't want to short semiconductors. I'm just going to tell you that now. I'm not going to get into it all right now. We're going to stay focused because there's a lot to do. But if you take one thing away, take this level with you today that I just gave you, okay? If you take nothing else from this, take that level. AMD. Take a look at the 7 o'clock. Always look at the 7 o'clock and see what retail's doing. Okay. All this over here, institution, Asian markets. They're selling down. They're selling down. What did retail do at 7 o'clock? They bought. Okay. So this buy so far is holding. They came back down to the open and they bought again. Now, let's talk about this level. This 84 level right in here, okay, that's an issue. And we need to look at that level and go, well, what's going on there? Let's take a look at this on a 2 hour and drill into it. Okay, bonk, bonk, bonk. Support could become what? Resistance. Okay, we could sell down on semiconductors. It is possible that people just don't want the losses, don't want the risk going into the Fed meeting. So while I think we could flip 84 and go higher and have a gap fill, I have to understand that I could be wrong. So I have to watch this and say, hey, I might be shorting AMD. I'm just going to play devil's advocate. I have no interest in shorting AMD. If I was going to short one, I'd short NVIDIA if it broke. But I can see how someone's going to look at that and go, oh, I'll get 81 out of it, blah, blah, blah. Okay, I get that. So there's where you are with AMD. That's the level that you need to watch. Starbucks. Starbucks, to me, this was not the worst quarter in the world. And here's the doji, and you broke the doji. So here's your level to me that you must watch this morning. You have to watch that 111.11. Okay, make a wish. You have to watch that level. It is a absolute utter key level that you must watch, because that is the first 15 minutes of the bar, and that first 15 minutes is everything. All right. So that first 15 minutes is absolutely everything. And that's where you had the most volatility. So we're going to want to watch that level. Now, drill into this on a daily, and you can see very clearly where your support is, right? So you have support right here. Now, does that become resistance? Well, I don't know. So we're going to have to watch that too. But this is pretty powerful stuff. Now, there were some names that actually broke out and are hitting all-time highs, and we should probably address that. Okay. I look at Lilly. You're hitting all-time highs this morning. I don't know that you want to rush into this. To me, it looks like so far all we've seen is selling. You're down $20 already in the name. 10% on a pharmaceutical name like of this magnitude is absolutely huge. So that's something to consider as well. It's probably not the name that we want to look at and go, no, I want to buy it up 10%. It's probably not that name, right? So that's kind of where my head is with it anyway. But keep that in mind. That's there. We should probably talk about this. So you're seeing massive blow-ups out there. Massive. CHGG. Okay, that's a massive blow-up. Okay, and you can just kind of see what's going on here. Right here in these breaks. We're going to get to the indexes in a moment. But I think this is really powerful. I want to review this. I went over this in great detail last night in last night's video. I suggest you watch it. But I just want everyone to be aware. They're coming out with earnings tomorrow, and he can do a lot of things to hurt people tomorrow. A lot of things. So I would be really careful, really careful if I was short this going into earnings. That's all I'm going to say. You can listen to my review of it in last night's video. I'm not going to rehash the whole thing. I understand that it's trading significantly over NAV. I understand that that's an issue. For me, I get that. I just would not bet against this guy. That's all I can tell you. I would not bet against him. There's probably 2, maybe 3 people in the world that have his track record over 50 years. 2, maybe 3. So keep that in mind. Now, if maybe I'm thinking out loud, like I'm thinking about it. Maybe it's 3. I don't even think it is 3. Now, we should probably talk about these banks and what's going on. So the issue that I can see in diving into this when I had some time last night, it seems to be that the FRC debt was marked down by JP Morgan, which means the FDIC told them they had to mark it down. Now, you look at Monday, the day, here's Monday, the day, right, that FRC is done. And you think that's the end. It wasn't, because when people started learning about the mark on tier 1 debt and the drop, that's what I think is triggering this. Now, PAC and WAL both have exposure to the commercial real estate market in California, which is not good. It's just not, right? Everybody knows that. San Francisco has some issues. They'll figure it out. The issue for me with this is, if we all know what the problem is, and we all know the problem is real estate, well, then that's not the problem, right? If we all know what the problem is, then we already know what the risk is. Well, that's not the problem. The problem, I think, is the fact that they have that exposure to commercial real estate, as well as they may have to mark down their tier 1 debt, just like JP Morgan had to mark it down. Now, this gets somewhat complicated, but if they have to mark down their debt, that gives them less capital, right? Because they have to put up more requirements, meaning just think about it as margin, right? If you have a loan and here's your loan, and all of a sudden that loan's worth 30 cents, 30% less, just for sake of argument, what do you have to do? Well, your broker's going to call you, Morgan, Goldman, Interactive Brokers. Hey, you need to put in $100,000. Hey, you need to put in $1 million. Hey, you need to put in $3 grand. You're going to go, oh, okay. And then that shiny new object you were thinking about buying, you can't buy anymore. Same thing with banks. All of a sudden, they can't increase the rate of deposits that they're going to pay their depositors. They can't lend money. It all feeds upon itself. So therefore, these things are walking into a slow death is what people are referring it as. I don't know that I'm buying that. I don't know that I'm believing that. I do know that you are saying it doesn't matter what the name is, doesn't matter how strong the name is. I'm very disappointed in this. I have a position in it. They had an excellent, excellent quarter, but this is going to provide opportunity. And this is one that I trade. Okay. I'd like nothing more for this to go back to $9 because I'll buy more of it. All right. So I nothing more. I'd like nothing more than that for that to happen. So that's kind of where my head is. Now, I don't know. I'm just going to tell you this. I don't know how bad this gets with the regionals. I don't know if we lose another one. If I was to tell you, are we going to lose another one? Pardon me. It sure as heck looks like it, doesn't it? And if I had to bet, it's this one, which is somewhat frightening to me because they have pretty good deposits. They have pretty good tier one stuff. Like it's not awful. Give me a second, guys. Give me 1 second, please. So fast forward, I do think that we can lose another bank. And I didn't think that way on Monday. But if they keep selling the equity down and they have to mark down their tier one debt, it's going to be a problem. So I think that it could be something else on the West Coast. But I think it's not just because of the commercial real estate. I also think it's because they have to mark the tier one debt down. So that's kind of where my head is there. Now, in regards to the indexes, and then we can open up for questions. Again, we'll go live at 2 o'clock today. But if we take a look at this, probably go live at like 1:55, so we're all set for it. If we take a look at the NASDAQ, all we did was get to the level that we talked about yesterday. I mean, that's all we did was get to the level that we talked about yesterday. You can see the DTL. You can see the break right here, right? 10 o'clock, right off the open, boom. Jolts numbers, people are surprised. I don't get it, but okay. So breaks down. And then what do you spend the rest of the day doing? Going higher all day. All right. ES. These levels haven't changed. Nothing's changed. 9 o'clock, 10 o'clock, breaks down. What's it spend the rest of the day doing? Going higher. Okay. So all you did was come down to what? 4,100, 4,110, right? 4,100. I mean, it's almost perfect. And then what did you do? You just bounced and you went right to the middle of the range, 4140, right? So while everyone's talking about this great sell-off, I see a knee-jerk reaction by retail. And then the rest of the day, what do we have? Buying. All right. So just think about it from that perspective. We have the panic. Okay. Who panics off the open? Retail. And then what do we have? Buyers stepping in. Okay, we'll go over smart money, dumb money tonight, and you'll see exactly what happened yesterday, in my opinion. So they're the levels that I would be watching today. I fully expect the Fed to go out there, and I fully expect them to raise rates today. They'll look like fools if they don't. Okay, so they're going to raise rates. I expect the language to change and be dovish. The reason I feel that way is because you have 3 investment banks that are out there that are pounding the table that they're going to change their stance. And I would not rule out that they have connections at the Fed. And I'll just leave it at that. So I'll open it up for questions and we'll go from there. No, we did not lose sound at all. You should have sound, Bob. So that's where my head is with this. And let's just get into it. So for me, 4,100, 4,110, right? 4,100. I mean, it's almost perfect. And then what did you do? You just bounced and you went right to the middle of the range, 4,140, right? 4140. And then what did you do? You just bounced and you went right to the middle of the range, 4,140. And then what do we have? Buyers. Okay. So all you did was get to the level that we talked about yesterday. I mean, that's all we did was get to the level that we talked about yesterday. You can see the DTL. You can see the break. Good morning. Yep, we're stuck in that range, QSR and gold. So we should talk about a couple of the ones you just went over. So let's start here. QSR, right? And I know a lot of people are going to be quiet and just want to come in at the 2 o'clock today, which is fine. It makes more sense, more actionable. I don't know how you can't love that chart. That chart's beautiful. It's a beautiful chart. I'd like to see more volume on the weekly, but it's only been 2 days. It's beautiful. It really is. I can already tell you that. You're it's up, pointing in the right direction. I'll put it in. I can already tell just by looking at it. But look at the turn. Look at the move. John, you know what restaurants they own? I like that a lot. I do. I like that a lot. I really do. I think that looks great. MNST. Yeah, I saw this. XLP names are going crazy. They're making life really hard. I mean, I can't buy these ahead of earnings, but this is more of an XLP name. And these names are all setting up to keep moving. And this looks great. I mean, there's very little to say about it. Very little to say. It looks really, really good. If you look at this and then you go CELH, right? And you see what's going on there. Let's put this on the daily. Okay. You're seeing this everywhere, this kind of move, right? And here we come in the earnings. It's anything that's XLP that they can get their hands on right now. And drinks are XLP. Okay. Drinks are XLP. I think the only one that blew up was KPR, right? I mean, you see with Pepsi. I think it was, what was it, KDP? Isn't that Dr. Pepper? Aren't they the ones that had the problem? Yeah, they were the only ones that had the problem. And that's probably bottomed if you're a long-term investor. Look at this. Look at your undercut right here. And now you have a hammer time right there. So that's kind of interesting. You might see a relief rally there. So take a look at that. Watch how that goes. But I like that name. I like the monster name as well. It's definitely something I'd be paying attention to. So I want to talk about gold. You're starting to see inflows back into gold. I think it's because you have a dollar and the dollar is going to be weak. I think that's why you're seeing that. Okay. And I think it's an issue. All right. So definitely something that I'm watching, definitely something that I'm paying attention to. Definitely something I think everyone should pay attention to, but the dollar is starting to be a little weaker. And I think that if the dollar gets weaker, gold's probably going to go higher again. I had a nice trade in gold. I think we bought it here when it broke down, or I bought it here on the breakdown. And then we just traded it up. We did fairly well with it. But I think you can see something here. I think this can push, excuse me. So I do like gold here. Intel went up. Yep, I saw that. I did see that. I'm not going to lie. I kind of like what's going on with Intel. I wanted the gap fill and I got it. I mean, this seems like a pretty classic. Give me a reversal day. Give me some time. And this looks like it's can grind higher. I would not rule out semis. I would let semis rule out themselves, right? That's how I'm viewing it. Let me just take a look at this as well. I have a trade on right now, so I'm going back and forth and watching it. If I look at semis, I have to look at those levels, right? But that Intel, I like it. I do. Okay, so their Alzheimer's drug works. What stage was it? Do you know what stage that was? Yeah, I'd be real careful. I mean, usually what happens here is the specialists gap it up and then it comes down. So we'll have to see how that goes. I would not be buying the Starbucks dip until you see it get over that level. So there's two levels that I would be watching on Starbucks. The first level is right here, this 108.86. If you hold there, and it seems like you are holding there, and you're already seeing a lot of buying coming in, okay? I do think you can get to this top level. I do think that's possible, right? I do think that that is possible. And then you can get up to that 111. You can see how you whack there. And then maybe you can gap fill. Can it work? Yeah. I don't know that I'm buying anything off the open right now. I think what I'm doing off the open is just watching everything and trying to figure out what the right move is. Okay. I think that's where my head is right now. And that's what I need to watch. So, and, go from there. I don't think you want to be in a position here where you're, hold on one second, any day plus, give me 1 second here. Okay, good. All right. So, all right. I'm just locking something in. Bear with me. Okay. So I don't think you want to be in a position here where you're chasing anything. I think you want to let the market come to you today and then find spots. That's what I think with that cam. Dell cost AMD. So let's do Dell. We did AMD. Take a look at the daily. All right. And if we take a look at the daily and we see how we're doing, I mean, here's your level. So I don't know that that's something that, I don't know, it's something I have to rush into. I would watch that doji. That doji doesn't really make me get too excited there. Cost, are you back to that 460? Let me see where you're at now. I mean, to me, it makes the most sense down here. This 460 level, if I can get down there. Up here, I'm not really in that range. You have this DTL, and it's got a couple of them, but I mean, you probably see this already. So, that's not something that I'm really keen on. Right? Like, I'm going to buy that into two different DTLs. Probably not. I'm probably not going to do that trade. That's not something that I would do. So, FYI. I'd probably stay away from that. Bob, you should have sound, brother. What's up, Josh? Look, the issue becomes if they mark the debt down. And I don't see how they're not going to mark the debt down through tier 1 losses. I don't see how they're not going to mark it down if the other guys are marking it down. It just doesn't make any sense. They're going to have to mark it down. They're just not going to have a choice. So I do think that's something that we should concern ourselves with. And I do think it's something we should be paying attention to. I really do. I think that it's definitely something we should be paying attention to. I don't know that I'd go out there and buy regionals right now. I'm a little, I have some regionals. I'm not saying that I'm going to get rid of the NYCB. I like it a lot, and I like what it did, and I like that it got to buy assets. What I'm having an issue with, pardon me, what I'm having an issue with is trying to understand how bad it's going to get for the other banks. Like it just doesn't matter that they're all being lumped together. And then we're watching this. If I can find it. I have to do it this way. Then we're watching things like this. We're watching these preferreds come down 10% again. Well, we're watching funds, we're watching ETFs and hedge funds dump this debt because they're concerned. So I start looking at this stuff like, look, there's a really good saying. The market can remain irrational longer than we can remain solvent, right? And what that really means is that we can know that these names are getting beat up. We know that every regional bank is not going to zero, right? But that doesn't mean that the panic can't get worse. Okay? It doesn't mean the panic can't get worse. So you have to take into account psychology of people, right? A lot of people don't. Give me 1 second, guys. So a lot of people will not take into account the psychology. Now, why the psychology is important is, I actually want to write a book on this, but the psychology is important because we all have the same data, right? Some people have more access to better data or more in-depth data, but for intensive purposes, 90% of us have this access to the same data, right? All right, so we look at that and go, well, this bank said they had no problems. This bank took a big write-down. That doesn't mean it's not going to $3, right? It doesn't. It doesn't mean that we don't panic, sell the entire market, right? And that's the kind of stuff that you have to start thinking about. Like, is that what's going to happen? Are we going to drop down? I don't have an answer for you. And looking at these charts, to me, I cannot go out there and I'm not going to add to these just yet. And I want to add to MTB, but I can't look at that chart and go, boy, I really got to get in there. I got to buy more, right? So, I would be cautious, Gabriel. I'd be very cautious because it seems to me that the desired result, which was FRC's over, right? That was the desired result, right? FRC's over. That's why you got this wonky trading now. Okay, when we thought that FRC's over, therefore we won't have an issue. I could never understand why they just allowed FRC to trade. It was just beyond bizarre. But yeah, it could lead. It did not have the desired effect that I thought it was going to have. I figured we'll be done. It's time to start buying regionals. It didn't work that way. It had the exact opposite effect. And I think it's because JP Morgan had to mark down their tier 1 debt. That's what I can find as an issue that was not thought of. In other words, what I kept looking for is, what's the issue? Why are we selling down? That's what I kept coming back to. So I hope that's helpful. I don't know why they have not guaranteed all deposits. I really don't. It's absolutely mind-boggling that they haven't done that yet. And the way that they've handled this, I don't care what side of the aisle you're on, is just sheer incompetence. It's beyond incompetent. And it's a problem. I mean, how many banks are we going to lose under this administration? Like, it's just end the problem. If you secure depositors, they will have some level of assurance, and they're not doing it. So it is what it is, man. But I agree with that. It's going to add to it. Hey, Kyle. So I don't think that Tesla's on my board is really setting up for anything. I think it's trying to figure out what it wants to be when it grows up. Now, we kind of saw this happen with Cisco in 2000, where Cisco was the big flyer, and then people couldn't understand why it was no longer participating in the market, why it just stopped. And I'm starting to lean towards we're starting to see something very similar to that. If I go here and I just put in the 200, I've got a declining 200-day moving average. Really hard to get excited about this. Really hard to get excited about that trade. So keep that in mind. It's not something that I'm going crazy for. I don't know if 145 comes first. I would not buy it. BABA I have buried in a long-term account because of the IPOs. You know, trading China names is extremely difficult. Extremely difficult. And, you know, we'll go from there. So I don't know. I don't know why it's doing what it's doing, but you're kind of at a key level there, aren't you? I wouldn't add to it unless you're looking out a year. No, I think that, look, I think what's happening is that this is my thought on it, right? I saw this and I saw the news. I think one, it's guidance. I think two, we're just seeing selling. And if you're not crushing it, they're just dumping it. And that's what they did. I mean, I'm going to tell you right now, the moment that I broke that, I'd be gone. The moment I took out that low, 134.70, I'd be gone. I wouldn't even wait for this because that's inevitable. If that cracks, 200-day test is inevitable in my opinion. So I would not want to be around for that. I mean, you can't look at that bar and feel warm and fuzzy about your position, right? You opened at the high, you closed at the low. I mean, I think this is definitely going to drop another $3-4. I just don't see how it's not. So, you know, to me, that's probably a, probably a short right there, candidly. I'm going to put an alert on it so I'm aware of it, but I think that's a short. I think that would work, and I think that's a short. There was something in the report they didn't like. I'd have to go back and listen to the conference call. I mean, that looks great. You're buying in the earnings next week. It looks really good. CL, Clorox, they all look great. People are buying the defensive names. I mean, they all look amazing. You know, this is funny. We were talking about this a year ago. Like, this is when you buy it, when nobody wants it. That's just how these names are. I mean, they all look great. They all look like they're setting up to break out. That's usually when they roll. So, FCX. Yeah, I mean, they came out and said that they can't even meet demand. They have so much demand for product, and the stock still went down. Could be dropping just because people think that basic material prices are going to come in. To 17% of the XLB. Doesn't look like they're going to come in, does it? You might hold here. You may hold here just like last time. I think you could hold there. Yeah, that trade's working. It's a trade idea I went over a long time ago. Well, maybe a month ago. And this was it. It was go long the big banks and short the regionals. And I think we went over it like a month ago, and you'd probably be up. I don't know. I'll say we went over it 30 days ago. We went over it April. What are we in May? Jesus, year's flying. See, we went over it April 1st. So what are you up in that trade? Yeah, I mean, you're up 4% in a month. I don't see any reason for it to change. I really don't. The more, I'm absolutely shocked by the moves here. In other words, I don't even think they should have made JP Morgan write down their tier 1 debt or write down FRC's tier 1 debt. I think that was a huge mistake that just caused more problems. And that's what I mean. Just like the Fed does not seem to have a handle on the situation. And they're just creating more and more issues. I don't see any reason that this is going to change. What's going to change this? Maybe when they start cutting rates in a year. Other than that, B, I just don't see it. What's up, John? The writer strike's bad because then you don't have content. Okay? The writer strike's bad because then you don't have content. The interesting thing for me is this level. We battle it a lot. With support, became resistance, resistance, flips, become support, support, support. Is that going to become support? I don't have an answer. I know all these people. Let me just go here and take a look at this. Oops. Are on strike, and I don't know how long it lasts, but yeah, I mean, if you can't come up with product, yeah, it's an issue. I mean, all the late night hosts are done. So. I don't know about payrolls. I would be careful with any kind of payroll company right now. I'd be careful with any kind of payroll company. I'd be real careful with these kinds of names. With tax receipts coming in less than people are anticipating, means that companies like this make less money. And if the JOLTS numbers are weak, you're going to need less payrolls. So I don't see this as something I'd be getting involved with, Mel. It's not something I would be playing with. You're having trouble with 280 still. We'll have to see how this goes. All right, guys, I'm out of here. I'm going live at 2 o'clock today, so I will post the link. Have a great day, everybody.